All right, welcome everybody. It is Friday, the 22nd of September, 2023. Fed has paused again. We talked about that being the likely thing that would happen. We've got Bitcoin still refusing to really break down. And so, we're going to talk about that today. We've got the stocks kind of pulling back a little bit. Are they done? I've seen some comparisons to 1987. We'll talk about that here. And of course, I have Mr. FiboSwanny joining us today, and he's going to have his thoughts on some of the charts. So hopefully you guys are ready for that. I'm Christopher Inks with Texas West Capital. I'm coming at you live here just a few minutes after 11 a.m. Central Standard Time from Lake Conroe, just north of Houston, Texas. Hopefully you guys are doing all right. So yeah, like I said, the Fed, again, we talked about this last month, the past meeting about the likelihood of them remaining flat, pausing again this time around, and potentially maybe having one more hike before the end of the year, but that's kind of iffy, right? And so then they came out, Powell came out this week and said, hey, yeah, we're going to pause, but we're still expecting one more rate hike by the end of the year. And by the way, we're taking off some of the cuts we expected to do next year. But remember, at this point, this is usually where the Fed doesn't get to follow through and things change. And so we'll kind of talk about that. But, again, the title here was, with the Fed pausing, is it time to buy stocks and Bitcoin again? And I'm going to be honest with you guys. I don't care what the news event is. All right. To be honest with you, myself and Fibo doesn't either. We both see the charts a different way. The conventional way to look at charts is that news events cause price to move, which then leads to other things, right? The way we look at it is there's this social mood, the society, how society feels, and how they feel determines how price moves. Right? If you're happy, if you're feeling good, if you're not feeling too worried or whatever, you put money into the stock market, you put money into the markets, causing them to rally, right? If you're a business owner and people are feeling good, they're buying things. So if they're buying things, you're going to ramp up production, you're going to hire new people, right? The other way is if you're not feeling so good, you're not going to take on a lot of risk, right? If you're feeling more worried about things that are going on, and again, this isn't you and me by ourselves, this is everybody in the aggregate. But if you're not feeling so great about it, you're not going to put the money out there into riskier assets. You're going to slow down your spending. And if you're slowing down your spending, the businesses is going to say, okay, well, people are pulling back on spending, so we're not going to spend as much. We're not going to produce as much. We're not going to hire. Matter of fact, we might even be laying some people off. But the market is the quickest, easiest way to see how the society itself is feeling, right? Because again, it's the quickest feedback. If people are feeling good, money goes in the market. You're buying stocks, you're buying crypto, you're whatever. Not feeling so good, you're doing the opposite, right? So let's welcome on FiboSwanny right here. What do you think, man? You agree with that same thing there, right?
Nope, I disagree completely.
Oh, you're such a liar.
I'm just messing with you. No, I'm with you on that. Yeah, I'm not a big proponent of following news events and getting in and out of the market based on news events. If the news matters to me, it shows up in my indicators and how I follow the markets. So I look for that price action to tell me one way or the other. And right now with the pause, Bitcoin still kind of holding in there, not really falling out of bed yet. So it's those kind of things that kind of, I just don't care about the news. I really don't. Because what happens is it kind of, one of the main things in TA is to kind of, mitigate your biases, right? You want to get unbiased as possible. And I know it's not, you can't be perfectly unbiased, but if you stay away from the news and do your TA in a vacuum and not care about what's happening in the news and look to the indicators, that's the way I approach it. And that's the way I've been kind of doing it for a long time. And that's just, so I agree. I was just messing with you.
Yeah. It definitely works. I think the big reason people look for
narratives
is because they feel like they have to have one, right? So we can't, it can't possibly be something else. There's got to be some narrative out there. And the truth is, price action and news events happen all day, every day. It's only when we choose to attribute the news event to a price action that it becomes something that everybody goes, oh, okay, maybe or not, right? But, again, historically, if you look at it, you can look at the same event happening multiple times and getting a different result. And the pundits, a lot of times the news journalists or whatever, they have to come up with some other reason why all of a sudden it didn't work this time. Why is it different this time? It was all the same stuff, but all of a sudden price went up instead of down, And so for me, a lot of traders, they come in, they talk to me about, and I'm sure you probably get the same thing as well. They talk about correlations between different markets and whatnot. And what I tell them is, I don't really look at that a whole lot, because basically if it's not happening all the time, then to me, why would I bother giving it any attention? If you're going to say, listen, stocks and Bitcoin are correlated, then I expect them to go up and or down at the same time. If they're not sometimes, and they are other times, to me, why the heck are we even going to watch it? Because at that point, what do we have? What reason do we have to do that? I think you feel kind of the same way, right?
Yeah, I mean, I look at it in a kind of couple different ways. Like, first of all, no matter what market I'm looking at, I look at everything separately, because because I'm trying to measure psychology, and the measuring that psychology in whatever asset you're looking at, to me, that's a pool of people that have a different psychology than that's happening in this other market. So yeah, they could correlate at certain times, but they don't. But they might not correlate all the time. So that's why I always look at everything's completely separate. If I'm trading something, I look at just that market and not really care about what's happening in other markets. Now, correlation is one thing, but I think it would take a step further, and you'd have to really get down deep into some intermarket analysis to where you would really want to do more than just correlation to figure out how to look at multiple markets at the same time. So for me, I just make it a little easier and just look at whatever I'm trading and look at that market and see what the psychology is happening in that market, and not try to say, well, since this is going up, this should go down. And it's not necessarily always the case. So to me, correlation could get kind of sticky sometimes. Yeah. And then when do you correlate? Is it a 14-day? Is it a monthly correlation? Is it a weekly correlation? Is it like what just like throw a dart and pick a number, and yeah, you can probably find some correlation. It just depends. To me, it's more of a study if you're going to look at more markets at one time than just correlation. I think it takes a little bit more analysis, but I skip all that because it's way too much work. And I just look at, I mean, it's already still a lot of work looking at everything individually, more along the lines of looking at it, in multiple markets. I don't have time for that. So I just look at it in separate, just individual assets at a time.
Well, the more simple we can make it as traders, the better it is usually, right?
Yeah. That's the way I lean for sure.
All right. Well, let's jump on here. Let's check out your chart, see what you got here. Looks like you got Bitcoin here first.
Yeah, we can start out with Bitcoin. Let me you can see the screen? Okay, cool.
Yeah.
You were talking about, kind of hovering here and not breaking down after the pause. Let's see, how am I going to start this here? Let's see, 4 hour. We went into the bear zone, but this is what's happening from the previous zone. If you look at the bull zone that I have marked down here, and the red fibs are what I'm looking at the moment. I've had a lot of buys in here, and I'm still extremely long. But what's happened is when you take my process here, we went into the bear or into the bull zone here. I start the fibs back here because it's based on when the ADX went from a positive on a week over week or on a 4 hour candle basis. So I start the fibs there. But when it broke into the bull zone here, that was a buy because that's a buy signal going into the bull zone. So I bought there. Market went up, and then it came back down to the 38.2% level right here. So I actually bought again because that's the way my process works. Get in, makes a new high because this candle right here went a little bit above this one. So it came back down to the 38.2% level. I bought again. Then the fibs actually made a slightly higher high. I mean, barely. But then it came back down and it rode along this 38.2% level again. So I actually bought again. So that's my third tranche getting into this market. And then it rallied up to this point, didn't hit my fib extension target, came back down, hit the 38.2% level again, bought again. So I'm already 4 tranches in. It actually went up and hit the target right here. So I took profit on that first buy back here. So now I'm 40% or 4 tranches in, or no, actually, once that went up to this point, I was at 3 tranches, and then it went back down to the 38.2% level, and I bought again. Now I'm back at 40% long, and then it broke into the bear zone. Now I wait for 3 consecutive settles under the 38.2, which it did right there, went right there, and then we had the third one right there. But this is just something that instead of getting out of everything, with it holding this 61.8% level right here at 26,486, it did wick down to the low at 26,359 right here. So what I did is, with the remainder of my 40%, I have a stop just under that low, because if it breaks that low, then I think we're heading down to, the full retracement here, maybe down into some extensions. So I'm willing to kind of hold this for 2 reasons. One, I'm willing to hold it and put a stop right there because my average of all the different buys I have are basically where we're at in the market. So I'm taking a little bit of a risk versus the reward that I could have. So instead of getting out of everything on this bear zone, it's more of a bear zone that's went sideways instead of a bear zone that just had tons and tons of momentum to bring us straight down. As you can see, the ADX kind of flat, not really bringing in a lot of momentum. So that is one of the reasons that I'm staying long and just stopping everything out if it makes new lows underneath this 26,359 is where my stops are. Willing to take that risk because I think upside will be there. And the other reason is when you look at the daily flipped into the bull zone, which had a buy in there also. And then I also had a buy in there from a while back. So I got a little bit of an average there. But since this went into the bull zone, and this is still kind of holding, the 38.2% level here, I still have upside targets for the daily. So that's another reason why I'm holding my longs here, because I still think there's some upside potential in this market. And another thing is when you look at just taking the fibs from the low all the way up to the high here, just taking, the absolute high and low. It's kind of hard to see because it's let me flip onto a different color here just so we can see. The 38.2% level of this entire move is at the 61.8% level, which I also like as a major support level, because that 38.2% level is holding. And when that shallow fib holds on that longer move, that gives me some comfort to say that if this holds, we're going higher and making new highs against this 27.5, which leads into my next target of 28.1, which is the trend line break here right at this point. I took the measurement back here to give us that. And then also the next one after that is the 200%, which is beyond this extension. So once this extension came back down, the next target's up here. Maybe it'll come down and support and then go up higher and then hit that next target. So I have my targets for those tranches that I have at 10% levels. When I say 10%, it's just the amount that I do because of the bucket of money that I have for trading this.
Right, 10% of what you have available to put in.
Yeah, available in that asset. So that's what I'm looking at. I still, even though we're in the bear zone, I'm still not super bearish. It's more like consolidation to me, unless this momentum starts to kick up, and then we will work our way down to this 25.8 or so, and that's what comes into the daily here. If it's in the bull zone, but if it starts to break down, the 200% right here is at 25.9, so it could break down into this point and still rally up and stay in the bear zone. But I'd want to buy it if it dropped down close to testing this bear zone on the daily and being around 25.9. And that's why if it breaks this right here and I get stopped out, I'll re-enter at this level right here, which is the 61.8% of this entire move. And it's also the full retracement off my threshold. So I like the way things are kind of overlapping is what I'm looking for.
And what price level is that for people?
The full retracement is right around 25,850.
Okay. Yeah. Okay. Yeah. I mean, that even makes sense because, that kind of gets you, 25,850 gets you into a higher volume node right there on the hourly. So yeah, I mean, it would make sense. Yeah, I mean, I'm kind of like you, man. I was waiting for it to break down, and it didn't break down. And I've got my target just if we do break down, I've got an initial target right there around 26.1 first, and see if we can hold that. That's actually the hourly pivot. So
and that works really well with I mean, I might get stopped out if it's 26.1, but yeah, I get that, and we'll have to kind of watch that out. But on the long term is another reason why I like it is that on the weekly is held the bull zone, and we've hit this intersection to where most buying interest should be, and that was when that low was tested close to that 24,760 area. Yeah. So with that being bullish, the daily flip into bull, not strong bull because the momentum is just not strong right now. So we're sideways with a possibility of higher market. That's why I decided to put a stop on this instead of getting out on all my longs at this point. So sometimes you got to, there's rules and then there's guidelines, and that's a guideline for me, not a rule. So the rule is to get out, but the guideline is the daily and the weekly and the support's holding. I'd rather put a stop in, and then instead of just getting out of everything, and then it rallies on me, and then I miss the opportunity. So
and I like it because the stop you're looking at isn't that far off. It's still pretty close to it. So really,
I'll lose a couple
extra
bucks,
loss
but
would be negligible.
Yeah. It's worth the risk.
Yeah, exactly. I like that, man. I like that. Yeah, so other higher time frames for you are looking bullish. They're in the bull zone.
Yep.
Just locally here on the shorter time frame, possible kind of dip into a bear zone, but kind of holding there. So not really like a convincing move down yet.
Not yet.
Yeah.
And if it does, that's what we have systems for, right?
Exactly.
Take small losses when they don't work. Follow the trends, and that's why I've been buying on the way up. And if I get out and I miss it all, then no big deal. But if it rallies on out of here, I'm 40% long. I'm going to make some good money. So it's mitigate the loss or the small losses, ride the trends. That's what
that's what we should be doing.
Basic
right?
System should be, right?
Exactly.
Don't take large losses. Take large gains.
That's right. That's right. Get out of those losses, sooner, right?
Yeah, exactly.
I don't really have a whole lot to add to it, guys. Basically, I just want to kind of get a reminder of the larger structure because really that's all we're doing. It's larger structures here, guys. So we had our main accumulation area here, rallies up in here. We got reaccumulation. So again, in terms of the way that I, label this here, we're still looking at this same chart, kind of move some stuff in here. There you go. So you can see it all. Me personally, again, guys, I don't think for most traders, especially if you aren't consistently profitable yet, I don't think you help yourself out a whole lot trying to trade the smaller kind of, in this just sideways, because really we're just sideways here since mid-August. And we're overall sideways here for 6 months. It's range bound, so it makes it a lot more difficult. For me personally, I think, we're looking for a breakout above this last lower high of this bearish market structure here off the high up here. So, we're basically, whatever your exchanges that you're looking at, it's right around 28.1, 28.2, right around there. If you can break that, then okay, so now, the bearish market structure is broken. Now we have bullish market structure off the lows, and that kind of, at least, that's kind of your, in your bigger picture here, that's your first clue, like, okay, well, maybe that bottom is in there. And so, again, that's, I think it's the big thing we're looking at. This right here is the 21 EMA. We kind of zoom in a bit here. You can see that it's worked as support here as we've continued to rally. This daily pivot is providing resistance at the moment. But, again, if we can get a rally up and off here, that's going to be a pretty decent move. Don't forget, we did rally up off this bullish divergence down here at the bottom. How high was that, man? That was a pretty good rally there. Oh, about
I think it was at least 15%, wasn't it? No, it was only 10.
10%, but it's almost $2,600.
Yeah.
So, I mean, for me, that looks good. If we can do that, again, I'm like Fibo. I've got my general kind of target up here, in this congestion up here. And so, yes, that $29,000, $30,000 area. But I'm telling you, if we're getting up there, the odds are we're going to break out above the swing high here. And, my count suggests, $50,000 incoming on that. That doesn't mean we go there in one day, but, if we're breaking out through the top here, we've had 6 months of consolidation, guys. So the longer you consolidate, the bigger, the stronger the move that you're going to pop out of it. So bigger picture, that's kind of what I'm looking at. So it's just, I'm like Fibo here looking at what's going on. It looks like maybe we might be getting some support locally, potentially breaking out a little bit higher there. But we'll see what happens. Neither one of us know for sure. We're just kind of doing, looking at it. We've got our levels that we're looking at. Again, if we're breaking down below swing low, we've got targets lower. That's the way you guys should be trading. Don't get into a trade and go, oh my gosh, it's going to do this, and then don't have any other thought, any other idea of what you may be thinking if it doesn't, right? You should understand that, okay, if it does do that, great, but what if it doesn't? What are you looking at?
Yep.
Oh, you guys are getting some echo on mine too? Yeah, why the heck is this echoing? Give me just a minute here, guys. Maybe I'll just let Fibo talk the entire time.
Yeah, I don't hear your echo.
Let me see here. It's even got this echo cancellation on. Let me see. Man, I tell you what, it's always something, isn't it, guys? Well, I tell you what, while I'm doing this, let's go ahead and let Fibo take us to his next chart.
Yeah, I mean, let's see. Which one do you want to? Which one? What do you want to look at?
Whatever you got next, man, just pull it up. We'll go.
Well, next in line, I got Ethereum. This is just something I'm trading at the moment. We went into the bear zone here. This is on the 4 hour, and I'll show you the daily too. But went into the bear zone, set it in here. There was let's see here. Actually, I didn't sell it because I'm not going short right now because the markets are still over like long-term bullish. So I didn't go short this market, but I was looking for buys on the downside when it came to the bear zone here. And once it went into the bear zone, the first level I was looking at was 1592. And that was the 200% off my previous threshold. So I went ahead and bought there. And then my next level to buy was at the fib extension target, which was about 1575. So both of those together, I just kind of averaged in a little bit for a buy. I think the average is probably right around 1580, 1582, somewhere right around in there. So I'm long a little bit, basically right in this low here, not with the wicks, but all the lows on these candles is where my long is at the moment. Now my stop would be if it got back below this the 141% at 1565. That would be where my stop is, because then my target would become 1521 way down there on the 4 hour. But right now I'm just kind of holding my longs to see if we can kind of push up out of here. My first sell would be the 61.8% level at 1612 if it wants to go up there and hopefully start to get into a bull zone eventually. So I'm trying to trade this from buying some dips and selling into some resistance points while staying in the bear zone. Just kind of messing around with it at the moment. But it is what it is, and I'll kind of keep an eye on it. If this looks like it's going to get pretty ugly, maybe I'll put a break even on here or put the stop in for down here, just kind of mitigate that risk. But right now I bought a couple little tranches in here, waiting for it to possibly start popping up. And if Bitcoin starts rallying and some of these other markets start rallying, maybe this will follow. So I'm not doing too much there. The deal with the daily is that we're still in the bear zone. I didn't have a target. I actually bought the 200% here and sold it back out when it hit the shallow fib. So this little move right here it wasn't huge, but it was a small move. But now now that I bought that and sold that, I'm on the daily. I'm waiting for this fib extension target all the way down to 1432. So on this, if this starts to break down here, that's why I would want to not do anything until it starts to get down into some of these lower targets. But just trying to play it out a little bit. So not much with ETH at the moment. Just kind of just playing with it, see what happens. There's not a lot of, I don't have a lot of risk in it. So my put it this way, my bucket, even though I'm 20% long, my bucket of 20% on ETH is minuscule compared to my Bitcoin trades. So I'm willing to take a little bit of a risk to see if this will kind of play out. So nothing fancy on that one.
Let me see here, guys. Am I still echoing out there? Can you guys let me know real quick? We'll see if I got that fixed. Again, it always seems like it's something, right? We can get with you guys here.
But if not, I can always jump onto something else.
Yeah, I don't hear it myself. Yeah, everybody else says better too. Okay, good,
right,
good.
Cool.
So I didn't actually do anything other than click a different microphone and then click back. So let me go ahead and pull up what I got here. Just let's see. Yeah, here we go. So bigger idea here is that we're basically in this bull flag here. We had this wick down below and backed up, and then we kind of pulled back down toward that area there and pulled back up again. So we're not getting much of anything yet. Let's see, that didn't turn out to be a hammer candle over here. Just a bit of a doji. So, oh man, I think I still hear it. I don't know what is going on with this, guys. But anyway, let me see here. So yeah, so for me, I'm looking for a breakout above kind of this. Well, really, it's this swing high up here. It's 1745 or so. I need a breakout. If I get a breakout above that, I'm looking at this descending channel resistance, the weekly pivot there, right around 1989 or so. And if we can get impulsive breakout above that, I think we rally up at least to the R1 pivot around 3100. But breaking down. Let's see here. This is the weekly chart here. Breaking down. What's this target here? Right around 1464. What was your target there, Fibo?
On which time frame? On the downs?
Yeah, I think 4 hours. What were you talking about? If it breaks down, you're looking for that.
Well, on the daily, my breakdown was at 1432.
So right there. Okay, yeah. So within $30 there. So I like that. Okay.
Yeah.
So
that's where I'm looking to. If it starts to break down, that's my buy on the daily.
Yeah, there we go. Let's see. Let me take off that echo cancellation, see if that helps. So yeah, I mean, same kind of target area if it breaks down. Overall, guys, basically for me, this is a 1, 2. Let me just throw this in here real quick. And this is just working on a 1, 2 as well. So 1, 2, 1, 2. What does that mean? That means if this is a 1, 2, 1, 2, and we get a breakout here, that wave 3 should overextend. It should be a nice big move to the upside. So, and likely, I mean, if we look at this, let's just say it pulls down here. By the way, you'll notice this 1430, 1460s right here in this low volume node. So definitely an area you guys would want to watch if it were to pull down to it.
Yep.
But let me see here. If we were to get that pullback there, that gets us up here toward the all-time high, up there toward that, that 4,400, 4,500 area on that. But, again, this is what we would expect, right? You expect if you've got 1, 2, and then this 1, 2 real close to this, basically this 1, 2, 3, 4, 5 ends up getting a little bit beyond where you'd look for the wave 3 of the bigger one there. And so then it has to reset and go, goes higher up to finish out that wave 3. So, this is a good setup. Again, it's just this consolidation, these lower or these higher lows into this resistance. And so when you pop out of that, it should be a good move up. Ultimately, guys, I mean, we're going sideways really from, back over here in July last year, right? I mean, this is where we are, guys. We are still sideways. So we have been sideways for a year plus now. Again, the longer you go sideways, the larger you should get that breakout when it happens, or breakdown if it were to break down. It's just the product of it. The longer it stays consolidated, the longer it continues sideways, the more of an expansion you should expect as it breaks out. So I think, man, I think there's a lot of possibility coming in this. The question just is, locally, do we break down a little bit lower here and then rally up, or do we, are we down here and we're just going to rally up from where we're at? But once you're getting above, man, especially once you're getting above that weekly pivot, I think that just opens it up for that move up toward the all-time high, guys. So.
Yep, for sure.
Yeah. So what you got there, Fibo?
No, because another thing I was just like on BTC, I look for those overlaps on fibs, and when you take the fib on the ETH here that I have on the 4 hour, just taking the absolute high and low to go along with everything, the 61.8% level is right there where my average is on my two longs. So as long as that's holding, I like just holding on for that little bit of risk that I'm taking if it ends up breaking there. So just like on BTC, it's the overlap that I have on just looking at the absolute high and low, which everybody and their brother's looking at, and then also the my threshold levels to go along with that. When those match up really well, I like how those overlap. So
it looks like you got looks like your 61.8 there's right around 1580 or so, 1583.
Yeah, 1583. Yep.
Okay. Yeah, so, I like that.
And that's basically right where my average is off my two buys. So if that ends up holding, that's a good spot to start. And hopefully, like you said, it gets up, starts breaking some of those other levels, get some buying interest behind it, and go from there.
Yeah, I mean, worst case scenario, I think worst case scenario, it just comes down that little bit. I think that's what it is. And, I know people are getting really freaked out because it's been sideways for so long. And, as human beings, unfortunately, it's not a very conducive atmosphere to feeling real good about things, right?
Yep. Complacency kills.
Yeah, because especially if you're a newer trader, you want to get in and you're already fearful because, again, you don't really know what you're doing. So you want to kind of get in and you want it to go up so you're in profit so you don't have to be so worried, right? But even if it goes up and then it just holds there in a little bit of profit for an extended period of time, you freak out and you start getting worried that, oh my gosh, it's going to come back against me. I'm going to lose money. But, guys, at the end of the day, you've got to absolutely be comfortable with losing money. Not that means that you need to go out there and make, silly mistakes and get into trades that you don't need to get in and stuff like that. But you have to understand that the only guarantee in trading is that you're going to lose money at times. And if you're going to lose money, you've got to become comfortable with the idea that it's going to happen. But it's all about the system. It's the process. You sit here and you concentrate on each trade by itself, but at the end of the day, it's not about each trade. It's about the entirety, the totality of all the trades you're taking over a longer period of time. Because if those trades that you're taking over a longer period of time, are causing your capital account to go up, guess what? You're good. You're fine. It doesn't matter that you're losing a little bit of money on some trades. But if you're always focused on that one trade where you're losing money and the next trade where you're losing money, the next trade where you're winning money, it's going to hurt you. It's going to be tough to trade it because you're always in that risk, not the risk averse, but the loss averse mode. And that's just going to cause you issues, guys.
Yep, I agree.
Yeah, go ahead, man. What else do you got there, man? You got some ES, you got the E-minis there, don't you?
Yeah. This one actually broke down a little bit on the 4 hour. Went into the bear zone. I did not go short. Probably should have. But it worked its way down. So I was looking for the next target. And for me, I was looking at this extension here, which was in between the 141 and 127. And it's basically off of the previous threshold, and it's kind of hard to explain. I don't have it all in here, but like on this one was, this was where the 200% was right here, and then you'd have to move it down to where the next threshold is, and that 200% broke. So there's other things I was looking for to see if it was just going to keep pushing, and it kept pushing lower and lower. So my next target was based on, it's kind of hard to explain, but it came back to this point. If you follow my stuff, you would see it step by step, but this is about 5 steps later. So what I was looking for was this trend, this target hit right here, and it came down and got me filled. And now I'm, kind of pushing our way to the upside. So I'm long at this point, being inside this zone. I actually put a break-even stop on it just to be safe, because we are in the bear zone, and this is a futures contract, and it could kick my ass. So being in the bear zone, I got a break-even stop at the moment. The shallow fib is where my target is. So with the buy here, I got an order in at 44.30. So if it rallies on out of here, that'll be my trade. And then if it gets up to that point, we'll have to see if it gets back up enough to get back into a bull zone. If it ends up breaking, up above that and it gets into the bull zone, then I'll reestablish a long. Mm-hmm. Otherwise, if it gets up to this point and starts to work our way back down, then I'm going to wait for the target all the way down at the bottom here at the 200% at 42.66 before I go back long again. So the way this works out, if with me being long right here, if I get up here and trade it out, that'd be awesome. And then come all the way back down and buy again and then take off. Or it comes down, stops me out, and then I wait for here to buy back in. So that's the way I'm approaching this at the moment. And then when you look at the daily on here, my target's not until this level here, which is at 42.90, before I would buy on this being in the bear zone. So this 42.90 matches up with, pretty close to this 42.66 here. So if this doesn't hold, then this is that next level for me on both time frames. Basically, this one's 42.90, the other one's 42.66. So roughly about the same area. It's just that I'm waiting on this one because my daily 10% are very much are larger. It's a larger bucket than my 4 hour. So that's why I'm kind of just playing this one on the very near term. And then if it ends up breaking down, then I'll buy it here, and then I'll also buy it on the daily on that target, which is the 61.8% of my previous threshold. And then on the 4 hour here, it's the 200% on the break of my extension. So that's the way I'm playing it at the moment. Did trade it. I did trade it out on the previous one, which is kind of nice. Didn't get back in because it went bear and just working its way down. So that's what I'm doing with this one. It'd be kind of nice to see your S&P look also, see if it kind of matches up or not.
Yeah, man, I like your breakdown target. That's actually where I'm looking if we break down. So my count has us as a 3 and a 4 here of a wave 3. You can see that we pulled back initially here almost to the 38.2, which is this is that wave B. This is that mid-August swing high that I've been talking about.
That's a big deal right there.
Yeah, and so you had the gap up here above it. And so we're kind of looking at this going, okay, well, it's the count's in jeopardy because obviously, we're right above the swing low here. But if I'm looking at this, it looks like an ABC is 1, 2, ABC is 3, 4, ABC is 5. It looks like a leading diagonal coming after a WXY here. And this would only be 3 waves down here, ABC. So for me, I want to see this breakout above what would be wave B here, right around 445, 1450. If I can get that, then I've got this local wave 3 target up here around 47.20 and a quarter. Larger wave 5 of 3 target up here at around 48.37 and a half. But, my target, if we break down, is pretty much the same as yours. It's this 50% retracement level right around 42, 41 and a quarter or so. Low volume node, fills in the gap, does all that fun little stuff. But, again, it gets it right there, a few dollars away, different around your kind of target area there as well. So as we found out, as you and I have found out, if our targets are aligning, they're usually pretty good. So
Yeah. No, that's why I was curious to see where you were. But the weird thing is like when the Fed pauses, right? The stock market should be supportive,
yeah,
not right? Isn't that why they're pausing? Is to keep all the rich guys in the stock market all rich, right? No,
that's the idea, right? It's
no, I'm just
not put anybody in pain anymore.
Yeah, and another reason why with them pausing and the market dropped like that, I was willing to kind of get in and buy that dip at my target level just to kind of see if it would rebound or not. So far, it's rebounding, but that's why there's stops and like you said, mitigate the loss, take the trend, that kind of thing. So I have a break even stop on this also because or no, actually I'll probably take a little bit of risk on that, but we'll see. But I like when because we're looking at it from a completely different way, and I like to see your wave count. I mean, I have my wave counts, but they're a little bit more broad. You're getting a little bit more detailed, which is nice. And that's what I wanted to see is where we were on that. And I like that it's overlapping. Checking in and wishing everyone a great day. Awesome.
Yeah, Deadly 123. He's been around for a while.
Nice.
But yeah, no. And your first target, actually, your initial target, that breakdown is actually this gap fill right here, right at this high volume node.
Yep.
So, I mean, your targets are legit. I mean, I like, obviously they're legit, but I just mean, I like where they're lining up, gap fill and then 50% retracement on mine. So, yeah, if it breaks down. But again, if for me,
might not.
It looks, it looks like we've got, a series of 3 waves here giving us a leading diagonal. And this looks like 3 waves on the pullback, just really, really deep. So if we can get that rally and break out there above that, again, that 45, 14 and a half area there, I think we've got a good run up there to 47.20 and a quarter. And, with futures, that pays good,
Yeah, real good.
So that's kind of where I look. But again, like I said, that just becomes wave 3 of 4. Now, I had, let me do this. Let me pull up a different chart here. I saw something online where somebody was talking about some comparison with 1987. So that was the,
Yeah, I was interested to hear about that. I didn't hear anybody saying anything about that.
Oh, it looks like I've got the same. It looks like this is the same chart. I just updated and know that I had. So basically the idea was if we look at the Dow in, let me get this over. We'll just pull up this real quick. Oh man, wrong one. Sorry. Give me a minute here. Let me get back on this one, and we'll show you show people what they're talking about here. But if you guys were around back then, or if you've at least heard of it, it was in October, and it was bloody. It did drop pretty significantly. Let me get to the daily here. I'll get rid of some of this other stuff. And they're kind of looking at it now going, oh my God, it's the same thing. It's the same thing here. I don't think it's the same thing. When we go to count waves, they don't align. And see, this is the thing. People who don't understand Elliott wave, they're always, oh, it doesn't work and this and that and whatever nonsense. But I'll tell you what, if you understand why Elliott wave does what it does and how it's, this representation of human emotion and how it all works here. I mean, so this is it, right? This was what we had here. And so, you had this breakdown, right? And so basically what you have is you have an A, a B, and you have a C. You have 1, 2, 3, 4, 5. Or 1, 2, 3, 4, and then A. Oh geez, always 1, 2.
It's
3,
like
4,
it's
5.
like a finishing diagonal.
Yeah. So you've got this. You got this flat here, right? So it just kind of comes like this. It goes A, and then ABC up for A of B, and then ABC down for, and then 4 up there for C, and that finishes your B. And then you have your C here, right? You have 1, 2, 3, 4, 5 coming down here. Okay. Now this is wholly different, again, than if you look over here, where we've actually got, again, on this one, this is A, B, C. If you zoom in on it, you can see it's 3 waves. right here, A, B, C. This one is 1, 2, 3, 4, 5 here. So this is 5 down, 3 up, and then 5 down. So this is an ABC. This is, 1, 2, 3, 4, 5, and then ABC, ABC, 1, 2, 3, 4, 5. So it's a flat. So if we look at it structurally here, if my count's correct, and I don't know how you missed that this is 5 waves down here, right? 1, 2, 3, 4, 5. It's the structure is completely different. This is an ABC down. This is an A. B is a flat, and then a C. Again, finishing off is 1, 2, 3, 4 up here, and then 5 down here. So if you guys have seen that post and whatever, I don't think you really have to worry about it. To me, the structure, it reads completely different in terms of Elliott wave and the count there. But this is the benefit of Elliott wave, guys. And even though Fibo, uses his system, if you guys don't know, I believe you got certified, didn't you?
I took the exams.
Yeah, there with that. So, I mean, so it's not like we're talking out of a rear end here or anything like that when we're talking, but I mean, really, if I'm looking at that, the structure here, it looks pretty clearly like an ABC. This one looks pretty clearly like an A, and a B is a flat. Because what they're saying is this to this, where we are, was this to this here. And it wasn't, right? By the way, you can also look at time. I mean, it's not the biggest thing here, but this happened for a reason, and this was just 38 days of sideways, guys. This was 38 days till the breakdown, right? This one, you've got a lot more support building here, right? As you've gone here now, well, at the swing high, 574 days, right? So definitely much bigger there, where we are. And that's important because you've got a lot more of base that you're building here. This one's very quick, right? Easier to break down through. This one, this sideways right here, all the overlapping starts back, I mean, it starts all the way over here, right? All the way to this point. It's 497 days of sideways of overlap in this area, building a base before it rallies up. So again, I think what Fibo and I are looking at as far as potential, if it does pull back a little bit further than there, and then of course, upside, I think that's a lot more relevant than 1987 there, guys. So
it's kind of like two different looks. It's if you look at it on the surface, which everyone's and their brother's looking at, the fractals look the same.
Yeah.
Like they look similar. What makes good TA is you got your surface that everyone's looking at. Now let's dig down a little deeper and look at some analysis to see if there's any similarities or differences. And that's one thing that Elliott wave helps with is that direction and the way the count's working currently versus last time. It's showing a different direction than what the actual fractals look like, or just what the pictures look like. Because if you made those line charts, they would look almost exactly the same.
Yeah.
But you can't look at it that way. You got to dig a little deeper. And I find that a lot with fibs too. Is everybody and their brothers looking the absolute low and absolute high, and it kind of becomes a self-fulfilling prophecy that everyone's looking at those levels. But same kind of thing here. You gotta kind of dig down deep and see what's underneath the surface. And that's where the psychology changes are, not at the surface. The surface, everyone's just kind of playing around. It's that in-depth analysis that you find that other people don't see on the surface that helps make those decisions on which way the direction's headed. I know it's kind of a weird way of looking at it, but there's surface to me, and then there's analysis underneath that everyone doesn't see unless you do the analysis.
Yeah.
So that's a perfect example right here. Is surface looks the same, but underneath it doesn't when you actually take time to look at it.
Yeah, 100%, man. Exactly. I know you got to be going here soon, man. What other charts did you want to share with us, bud?
What else I got up here? I got gold I was looking at a little bit here. We went into the bear zone here on the 4 hour. I had a nice trade on gold on the previous move up here.
Yeah.
yeah, I had a nice hit the target. I don't have all the lines on here, but hit the target really nice. Went into the bear zone. I did not go short, but I was waiting for this fib extension target to get back in long. Didn't quite get down there. It's actually starting to work its way back up, but to me, the momentum's dropping. We're still in the bear zone, so it's probably going to consolidate in here a little bit. So for me, on the 4-hour, I'm just going to be waiting for a new bull zone to see before I buy to get back, going back to the upside, or if it starts to drop. And the way it's kind of looking, it could kind of work its way down a little bit. Just eyeballing a trend-based extension here. The 61.8% level right here, it falls inside here, and then of course you got further targets, but I'm just waiting for the fib extension target area or a new bull zone. So not much happening there. And then on the daily is still bear, and that's why I'm waiting for more downside targets before I do anything. This one's all the way down to 1872. Which is the 200% off my previous threshold that I would be buying on a move to the downside if it gets there. Otherwise, I'm waiting for a new bull zone on that one also. So that's 1872 there. The target down here is 1905 if it gets all the way down here, but not much going on in this one. I just like I had a nice trade. Now we're just waiting for another setup. So I don't want to jump in thinking that it's just going to rally on out of here.
Right.
So I'm just going to wait for my bull zone or a downside target. And then going along with gold is my silver. Silver went into the bull zone right here with a buy. Even though it dipped all the way down, even wicked down below the 200%, it stayed in the bull zone. So there wasn't a lot of momentum being built for this downside move. And now we're back up. So, buying in at this new bull zone here, you're back in the money or pretty close at break even at the moment on the dip. I'm not in it. I'm just following it just because other people are following it. And right now the buy right here basically was at about 23.80, which we're at 23.81 right now. So not making a lot of money, but if you bought in here, the target's at 24.5. So a little move up there, that's where you'd sell it out at on your first target. But I like that it barely got into the bull zone, but it did. And with it holding right here, that's a good thing that this target could kind of work out. But again, it's just like gold. I'm not going to jump in just to jump in.
Yeah.
I'll wait for certain targets, but I'm not trading silver at the moment. I just have a couple other people that are, so that's why it's updated. But that's what I'm looking at on some of the metals.
Okay.
But that's all I had up here, unless somebody wants to see something else. That's all I got at the moment.
Let me pull it up.
I got a billion charts. I just don't. That's all I have up on my screen at the moment.
Right. I think my biggest thing. If we zoom out to the monthly here on silver, I think my biggest thing is this descending resistance here. So we come off the all-time high here, from April of 11, and then it hit here again February of 21, and then we're kind of coming up toward it here and trying to hit it one more time. So, with where we're at right now, it's around $26.5, $27. I think if we're taking that thing out, I think that just opens the road up to the all-time high.
Oh yeah, no, that'd be awesome.
Oh man, yeah, and and it's fallen behind gold. It's been struggling behind gold all this time. Gold making the new or that all-time high there, coming up there, back above 2,000 from that same 2011 period, right? And silver, of course, is still way down here. Silver is still.
It breaks that, it's going to play catch up.
Oh yeah,
I would like it.
Even right now, even if it's height there, it only got up to. It was still down, almost 40% off the high there.
Yep.
So. Yeah, for me, I like it. Overall, I like it. We're holding this monthly pivot here. We're kind of just been bounced on it, consolidating there. Looking for that breakout higher. I'm looking for a breakout above 27, basically 27.495. If I can get that, I'm looking up at around 47.86 minimum. And so again, I think that's the big move. I think if we can break that and do so impulsively, I think that sets up the move higher. On the weekly here, Just some kind of lines I've been drawing on there. This one didn't pan out over the time here, but we're just range bound right here again. Since March, we're just kind of range bound here. Does it become a triangle? Is it A, B, C, D, E? It's possible, right?
Yeah, it's sort of forming that.
Yeah. I'm just trying to look at the count here. 1, 2, 3, 5. 1, 2, 3, 4, 5. Maybe not, but it is consolidating there. Either way, if we get that breakout, that's still what I'm looking for. As far as gold, again, like you said, just consolidating, right? That's all we're doing here. This is the weekly. You were talking about consolidating even locally here, but even dropping out to the weekly, it's just consolidating up on this support here. Yep. Right around 1924 or so, 1925, 27. So, again, if we can get this breakout, in this case, it'll be $2,010. Let me see here. Basically $2,011. If we can get that breakout there, I think that's the one that takes it up higher here, and we start looking up there toward 2,100 plus on that. But if we do break down, I'm looking, potentially down here around 1877 and 1836 as targets to the downside, and then looking for the breakout, the breakout up higher. There's nothing going on here that to me screams that it's going to, drop down to new lows and, head on lower. So I think we're just consolidating, ready to move up. As a matter of fact, my count basically has this as a 3 and a 4 here. So a 3 and then A, B, and then C here is a 4. Then we're up, right? Mm-hmm. So I think we're set up. Well, whether it happens, the next few days, before we break out and head higher, or whether it happens next few months, I think overall the positioning on this bigger chart, I think is really bullish. And the same thing there with silver. So we'll see if we can get that follow through with it.
Sounds
That's my
good.
thoughts, though.
So anything else we need to look at before we I got about 5 more minutes.
I know somebody said oil, but I know you can't do that.
Nah, I'm not doing that.
I can throw my oil chart up here though.
Yeah, go
ahead. I'll throw mine up here. Let me see where we're
I won't comment, but you go ahead.
No making faces, no making noises.
I'll be like. No,
let me see here. This is the bigger chart here. Let me see here. I don't even know what I got going on here. Let's see. Yeah, so again, we had this lot of just sideways here, man. I have to be honest, this one kind of tested my patience here. This thing went sideways there from November till we finally broke out over here this month. But it was this whole thing, and then really it was this, because listen, guys, if you're looking at this, this is what you have here. You have this consolidation. You have the deviation to the downside, back up into the consolidation, deviation back down, and then you have consolidation once more down here, right? But this breakout of here is what we were looking for, and then we wanted to break out above here, and we got them. So I think we might be potentially finished up with wave 1 here, or 95 or so is my next kind of target going to the upside. So we'll see what we're doing locally. Let me zoom in here a little bit. There's that 4 hour though. It looks like A, B is a flat C. So, we broke it above it. So it looks like just an ABC down. It looks like we might be popping up higher here. If we do break out higher again, just based on the height here of this. Initial target right there at $95. So locally, that's what I'm looking at. Overall, though, it's been a good move up off the bottom, up off of all this consolidation that we had here that lasted forever.
Yeah, just curious. What's the 61? Like, if you pull that chart to where I can see the high over here on the left.
The all-time high?
Yeah, the high. Yeah. Not the high. The second one. The one, the lower high. Right there. Yeah, if you take the fib from there to the bottom, I'm just curious where those levels are.
See here. Now you got to remember, my fibs are set on log scale now.
Well, that's a mistake. No, I'm just kidding. I'm just messing.
Yeah, let me flip it the other way, I guess, here from the bottom.
Just on that one. You don't have to flip it on all of them, but
yeah, you can see it there, and It's rallied up there, not quite 61.8. If you take that off, if you just do it regular like you use them with yours, there we go. That's 50% almost. 93.68 is 50%.
Okay, I was just curious. I haven't looked at that. I was just seeing where that resistance would be. So basically, the 61.8% level is right at 100.
Yeah.
At the century mark.
Yeah. So I mean, it's been a good move up. Structurally, let me see here. This was our last. I mean, so we have this bear market structure here, this bearish structure coming down, and we popped up above that last lower high. I mean, so that bearish market structure is broken. Now we've got a high, low, higher low, higher high. So that's good at least. But for me, I like visually this area right here. I want to see it kind of break out above. So this kind of area right there. So $98. I want to see it get it. And that, if you're saying 98, you're basically saying 100. So if you're breaking 100 with some seriousness, all of a sudden, 130 and potentially more does not look out of the possibility there, right? Not that I'm asking Fibo here.
I'm not answering.
Yeah, his day job, guys. His day job is trading oil and whatnot. So
yeah, anything energy related, I don't want the conflict of interest, so I don't deal with it on the outside. So
that's why he doesn't do it. And no, he and I do not discuss it personally either.
Nope.
Other than that, I guess just the DXY. You got a DXY chart you pull up here real quick for a minute?
Oh, did I miss that one?
Yeah, I don't think we did that one. Because we were on Ethereum and I jumped over to the E-minis there for S&P.
Okay.
You've got it right between them there in your charts.
Oh, yeah. I did have dollar. Bull zone. Been following the bull zone here. Working our way up. Actually hit the fib extension is what I'm watching. And since we got above the 141% here at 104.94, it didn't have three settles there, but it came back down and hit the bottom right here. And then started here. I can move this. Move this out a little bit. So as you can see, I look for the break of the 141 to bring the 200% into play. And with it getting up here, it didn't fully break here because the third settle brought us back down, but it hit the bottom of the zone and worked its way back up. And now we had three settles above it right here. And now it's, this is going to be support for now. And then working our way up to the target of, I got 107.17 on this move. So right now that's, long the market, working our way up to that target before heading lower. But if it ends up breaking back down, the shallow fib's at 104.28. So it could actually come back down here and test the bottom of this zone right in here, which basically it's between 104.28 and 104.40 is where the key support is while we're in the bull zone. Momentum is still there for the bulls. So I wouldn't be surprised if we, moved our way up to that 107 on this leg. And then beyond that, we'll have to see what it looks like when we get there. But that's what I'm kind of watching at the moment on this.
I like your 107 target. I know you don't usually zoom out for it, but I've got my big count here, and your 107 just kind of follows this this congestion here in August of 02, starting around August of 02. Support over here around July of 2000, just above the swing high here in June of 89, and again right here in this congestion in 86. So I mean, I like it as a target there. It also, with the way that I draw my supply structures and demand structures, it actually is just about the EQ of that. The EQ is just a bit higher than that, about 0.3 higher, 0.5 higher.
Yep, and it should be done and going back down.
Yeah, I mean, that's what I'm looking for right now. Now if it does break out, guys, again, we'll assume that that wave B is still in progress, building this flat out, and we'll look up here around 125.7. But if we can get this break on, this rejection in this area, and come on back down. I mean, that gets us a 3 down here at 75.33 and 5 of wave C down here around 70 to finish what appears to be a flat correction here. Big picture forecast. So, that would be a lot of downside for the dollar. So, a lot of dollar strength losing out there. Choose your narrative. BRICS are going to destroy the dollar, whatever you guys want to say. Can we run all that inefficiency up to 110? We can run this up here, but remember, this is the monthly candle. So the odds of that happen are less. Often it's just like a halfway move up that fair value gap, kind of like you have here and whatnot. And again, here, coming up over here, because those monthly candles, a lot of times it's just a breakout against it, and then it's the fallback and continuation in the trend. So usually it runs about halfway up it. So yeah, I mean, it's possible. Then that would be where I'd be looking if we do. But, I don't necessarily feel like that's going to happen at this time. It does seem like on the lower time frames that it is getting really tired here. The daily's starting to pick up a little bit there at the bottom, which could give us a bit of a boost. But right now, we'll see how this turns out. But, man, these are the last 2 daily candles. We had the doji here. And then we had this one, which got rejected. And this one popped out just slightly higher, rejected again. So, is there enough to push it higher, or are we going to lose this support here? And then things get kind of interesting. Then it starts to look like maybe this might be topping in here, finishing. Again, for me, this is just a what do you call it? Flat correction here. So could definitely see it rallying up here to wave A, which is up here to around, 106 or so. 107, it's just a bit of movement above that, right back up to this area. See where Fibo's target is right here? Yep. Makes a lot of sense. But it just gets us right above the 50% retracement, guys. Or not even that, guys. No, that's going to be less because we'll go from here. So, yeah, it'll just get us right around the 50% retracement.
Yeah, and the thing is on my end was I had 2 buys, and one of them was right when the threshold started, and then I sold out at the fib extension target, bought back on the dip. Now we're working our way back to the upside. If we get to 107, I hit my target, that's great. But if it starts to break down and then it gets back into the bear zone, I'll probably lose a little bit, but I won't lose on the overall trade from the beginning of the move. So if this doesn't make it to the top and starts to break down, I'll be all right. But then again, it comes back to having a system to where, you mitigate the loss, reduce the loss, but ride the trend. And that's basically what I'm doing at the moment. Will it get to 107? I don't have a clue, but right now it looks like it could. And that to me would be the end of this move based on the structure. And then it would start to break down from there, or it breaks down from here, and then I'm back out with a little bit of a loss, and then work our way to the downside. So it's working. It's just step-by-step process, but it's working.
Yeah, a lot of overlap.
So yeah, a lot of overlap.
We've been sideways for a while there, as you can see. So yeah, it's just when you're trading ranges, it's different than trading trends, guys. And your approach on ranges is much more localized than what you would have on trends. So you guys. A lot of things the new traders, a lot of problem they have is they do the trend just fine, most of them, a lot of people, right? But when they get into the range, they try to do trend trading in the range, and that's where you end up losing out a lot on there. Andrew's asking daily tweezer tops there on DXY. Yeah, potentially, but again, we need to see how this ends. These are not great candles, but they're still finding support at this previous area of resistance. So you really want to see a follow through down below this doji here, this 104.345 on the dollar futures chart. You really want to see a breakdown below that to start going, okay, that's probably, a good chance that's the top there. But, like I said, for right now, you don't like seeing these big wicks up here, potentially tweezer tops, but they are still, for now, finding support at this previous area of resistance. So there we go, guys. I think that does it for Fibo. He's got to get out of here.
Yep, I got to run.
Hopefully you guys enjoyed it. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. Join us at members.texaswestcapital.com. You can get in and try us out there. Just get a little taste of us there for $11.99 a month. And then if you like what we do, you can, boost yourself up. We're about to have Fibo stuff available for you guys to purchase as well over there. Jonas has his signals. We're going to do a special on that. All this celebration of TWC's 7th anniversary, guys. So check on it. Premium. You can get it for half off right now. Get a hold of me. I'll get you the link. That's it. I hope you guys have an amazing weekend, Fibo. I appreciate you joining in, man, as always. And just remember, guys, don't enter just because there's a chance. Look for those higher confidence entries, where you got more support, more reasons to believe that you're probably right rather than wrong. If you can do that, you're going to eliminate a lot of bad trades that you would take, all right?
Yep.
So there you go, guys. We will see y'all next time. Take care.
All right. Thanks.